Hey listeners, Adam O'Donnell here with Zendesk. We have a special interview with the co-founder of Shift, publicly traded company listed on the NASDAQ. They've raised over $500 million. He shares how they actually hit product market fit in the early days, but ended up having to stop that product and start a new one to get to the next level of scale.
The original idea was to acquire cars from sellers, but not actually take physical possession of those things. Instead, we wanted to empower a seller of a car to have all of the resources that a dealer would have, but be able to do it themselves. I discovered that at least in the Bay Area, most people were like, I love this whole inspection report and the ability to do financing, but you know what would be really nice is if you just take the car and sell it for me.
So they're learning, taking action, iterating. In the Bay Area and LA, this was working. But the question was, would this scale to the rest of the world?
The team went out and did a bunch of really insightful user research and discovered that there's a lot of people who want to consign their car, but that's only like 20% of the market. The other 80% kind of need the money from that thing to buy the next thing. And so we thought we had this product market fit and we were growing and had this thing, but then we started kind of hitting a wall and we needed to start rethinking the product. And the team came to the conclusion, actually what we need to do is go out and get a major financing line and start buying the cars and paying people up front for these cars, what we call advance funds, advancing people the money on their car so that they could afford to go buy a new car. And that would be like a market opening. And bit by bit, we discovered that, as you go down that path, we actually ended up in a very different business than we originally were in. And that is we have to finance and take asset risk on hundreds of millions of dollars worth of vehicles. We have to store those, repair them, maintain them, and manage them. That's like a whole asset management program that in the initial phase, we hadn't been in at all. But that's what was needed to grow because we'd tapped out the market for the thing that we were doing.
How easy would it have been for them to say, hey, we have a good business here, let's just stop now? Or we tried everything we can, there's just no other way to make this thing work. They went and talked to customers and did in-depth user research, and they were not afraid to burn the ships and completely change their business to grow and scale. Hey, welcome to Sit Down Startup Founder Podcast. I'm your host, Adam O'Donnell, former founder and VC. I now work at Zendesk for Startups, where we offer 6 months free use of Zendesk for qualified high-growth companies.
There's actually a story behind these ones in particular. This thing has Shift written on it. And for years, as we were building the company, we had to be super lean. And so we always wanted to have cool swag and stuff like that in San Francisco kind of vibe. But we kind of cut back and we're like, hey, we're not going to be able to do premium brands and stuff because we're in e-commerce and this is a Shift and we're selling cars and we're trying to stay lean and pass everything on to customers, low price, kind of making sure that we were delivering for our customers. And so we couldn't really invest in things like that. But then when we took the company public, my co-founder and I kind of personally funded buying Arc'teryx's article. Everybody got to choose, you want a vest or a jacket or whatnot, with the name of the company and then our new stock ticker on the logo, just to say thank you to the team that had been there all the way through to taking it public. And we're really excited about that. So I still wear the little Arc'teryx thing that we got for the whole team as as a memento and kind of a milestone of success.
Thank you so much for being on Sit Down Startup, where I'm excited to hear your story with Shift, the ups and downs, but really some of the growth things that you did that helped you get to that, to help eventually build a publicly traded company. So could you just kind of go back to the timeline? When did you first start the company?
So the original idea was around, I think something like 2013. My co-founder, George, and I had done a previous company together called Tax the Magic. That's a whole other story unto itself. But the idea was we wanted to do another company and we would get together on Sunday evenings to do these riff sessions on what would be the next idea. And we came up with a bunch of ideas and then kind of narrowed down to 2 and then picked one and ran with it. So that's when the initial thing happened. It started out really with kind of exploration and sort of research and experimenting. In the classic research and development phase, it was very much the research phase. And George was leading a lot of that. I think first started selling cars in 2014, 2015 kind of timeframe. But didn't really start growing until late 2015 is when we started really accelerating the total volume and team size, et cetera.
Very interesting. I'm really excited to hear this story, but could you tell us that ideation conversation that you and your co-founder were having together in those early days? How wide was the option or how narrow was it? It
was pretty wide. We were thinking about all kinds of different stuff. We narrowed down to I can't even remember all the crazy ideas. that we'd come up with. But we narrowed down to two of them. And one was the idea of, quote, we labeled it cruise.com. The idea was to bring e-commerce to selling cruise line bookings, which is not a bad idea. I think there's an interesting idea there. The idea was that part of the travel segment had been underinvested in, et cetera. My co-founder came up with that. He had a lot of knowledge on the travel industry and had done a bunch of stuff in online travel. And then the idea that I'd come up with was, hey, I kind of think that car selling and buying was broken. And in fact, he and I had both personally had experiences that it just went kind of sideways and were weird in the auto buying and selling, and had actually discovered that about 45% of all the used cars that sell don't go through an actual dealer, that it's like private party, peer-to-peer. And so one of the things that we were contemplating was this idea of like Craigslist killers, where it's like there's transactions happening and things that people are doing that could be made much better and be like a managed marketplace. We've done a marketplace in the past around ground travel. And we narrowed in on this idea of trying to make the selling of your car and the buying of a car from another individual a great experience. Like that was the thing that we really wanted to make happen. It's a big, important purchase, and it's a broken experience. Like almost nobody says, boy, used car dealer, love those guys. And so what we, and the fact that almost half of all the transactions don't go through the car dealers was a sign that thing is pretty broken. And so what we narrowed down to was those two ideas, and decided to go with the car one. Among other things, for me personally, I had trouble getting passionate about the cruise thing, but the car thing, I was like, wow, that's like a big deal for a lot of people. It's meaningful. And eventually we kind of developed this phrase of like, friends don't let friends buy new cars, because it's like a trap. And you basically get taken advantage of. Even if you've won the negotiation, you still walk out with a car or an item that is worth tens of thousands, that's depreciating like $2,000 or $3,000 a second you drive it off the lot. And we're like, that is a total trap, and that is not cool. And we want to create an environment and an experience with technology that would make this very important transaction, both easy and trustworthy. And so that's what we got passionate about and went after at the outset.
That's amazing to consider those two different things. You weren't from the auto industry, you weren't from the cruise industry, but yet you're confident enough and humble enough to think that there'd be a way to do this. Like, and you'd be the founders to do it.
Yeah, the basic idea was, hey, let's find an area where there's something that matters, that actually matters in people's everyday lives. I worked at Capital One Financial for a while, and we were in a lot of ways inventing this concept of fintech and building out one of the biggest fintech operations in the country, if not the world. And people would oftentimes say, hey, we're not a tech company. We're not like a photo sharing app. I'm like, no, but this stuff matters. Like people's money matters, the cars matter. And that's been a theme that I've done is we've always done sort of online to offline over the journey. Things that are digitally driven or technology oriented, but actually have manifestation or come to reality in the real world. And something about that has always spoken to me, that there's something about making an actual substantive material difference in someone's life and day-to-day life. And so that was the big theme, is like, what is it that will be real and have an impact, but at the same time could be transformed with digital technology. Now you might say, whoa, like what are you doing going and becoming like a used car dealer? Like I never grew up thinking, boy, I'm going to become a used car dealer. I also never grew up and thought, well, I'm going to be like a taxi operator. And in fact, in 2007, we were building Java apps for BlackBerries, so you could push a button and have a taxi come pick you up. You might find that familiar. You're like, hey, I've heard of that. I jokingly say that we built like Netscape with the Uber space in Taxi Magic. We went to like 30 cities. We built out a big system where you could do the thing. And at the outset, people were like, you're crazy. Like, what are you doing getting into this like taxi place? That's like a reviled industry. Like, who wants to be a taxi operator? And I kind of said, well, the thing is, if it's reviled, that's a sign that it's broken, because everybody needs a taxi. And by and large, lots of people, hundreds of millions of people need cars. You got to get from here to there. But if you say that the way you get the thing, either getting the taxi or buying a car, is reviled and broken, and like, ooh, who would want to touch that? That is a prime example of the thing that can be transformed. And then, very, very soon thereafter, this is 2007. I think by 2011, 2012, everybody's like, well, micro mobility and like mobility, it's the coolest thing ever. And you're like, yeah, you go to the thing that's massively not cool, because that's how you make it cool, is you transform it and you make it better. the fact that it's not cool is the sign that there's an opportunity and that you ought to be working there.
I love that. It's almost this barrier to entry. That's one of the easier barriers to break through. You just have to step over the line. You don't have to actually do anything, but it does create it stops a lot of smart people from jumping into it just off the cuff. I love that. Well, how big are you now?
I'm about 5'11". I'm kidding. You mean, Adam, you're talking about Shift?
How big is Shift now? Yeah.
So Shift is now a public company. I think so I have to be careful about, sharing numbers. Obviously everything comes out in the quarterlies, but last year did about 630 million in revenue. I think, give or take, is kind of the velocity that the company was at. So grew substantially. I think we 3x'd from 2021 to 2022, or 2020 to 2021. Wow. Did a ton of growth, and there's a lot of learning from that kind of velocity and journey. So selling cars across the nation, so in all 50 states, including have sold cars in Hawaii, if you can believe it. Like, people would buy online and we'd ship the car over. That's a thing. So sort of a national footprint, and eventually, we can talk about this in terms of how you think about product development as well as user acquisition. But over the story, or the journey, I noticed that the thing that you do at the outset will get you to a certain level of growth, but at a certain point, you usually have to have discontinuous change to get to that next level. And there's like step levels. Doing things like all digital marketing and growth and advertising, but then needing to go over to like a TV, out of home 360 marketing campaign after you go beyond what, say, digital could reach, those discontinuous things. And so we did a lot around like thinking about, first we're like, hey, we're going to be very technology oriented. And then we're like, well, actually we need to mature into being a brand and building out a proper brand. And you don't do that right away, but you get from here to there over time. And so the one key learning I think that hit me was, in growing, you got to optimize and do the thing that makes sense at this stage. It takes you to that next level, but recognize that what just got you to that next level probably is not going to be the thing that will take you to the following level. And so you have to be willing to take on capabilities, team talent, and strategies and approaches that you might not have before, because it actually gets harder and harder to squeeze more and more juice out of the same thing. You kind of have to have new things in order to accelerate to the next level. So that's sort of the high level there.
That makes a lot of sense. You have to keep changing those phases. Let's just go back to one of the first phases that you had. So could you take us into a conversation around a growth strategy or something that you did that worked really well?
I think one of the like a big, and I'll give an example of a thing. It's easy to come up with like hey, we did TV advertising and things started growing fast. Like, that happens. But the more interesting story is when you realize that you've got a product market fit that actually is limited and isn't going to be scalable. So one of the stories is around the way that we acquired cars. And this happens in kind of three phases. The original idea was to acquire cars from sellers, but not actually take physical possession of those things. Instead, we wanted to like empower a seller of a car to have all of the resources that a dealer would have, but be able to do it themselves. And the team was doing this in San Francisco Bay Area. And the original concept was, hey, let's create like an inspection report. Someone could like take their car to a certified mechanic, get the inspection report, and then use the inspection report. And we would bring like financing capabilities so somebody could borrow in order to not have to like, pay that $10,000 out of pocket. That's like, most people don't walk around with like $10,000, $20,000 in their pocket. So we were like, let's create all those capabilities, was the original idea. And the team was doing that. And they pretty quickly discovered that, at least in the Bay Area, hey, most people were like, I love this whole inspection report and the ability to do financing, but what would be really nice is if you just take the car and sell it for me. And so it turned out that in that particular sample of users, what people wanted was convenience. And so what the team did was like say, okay, well, we'll start taking the car. And originally there was like parking it on the street around like the Castro and like not having anywhere to put these things and like moving them around because there's like limited parking, et cetera. So super scrappy, early stage, minimal tech, just sort of figuring the thing out. And eventually that began, particularly in the Bay Area, to scale. People like this idea of like, take the car, and then it turned out you had to do repairs on it. You're like, oh boy, reconditioning. You had to like hire mechanics and have them, ASE certified mechanics doing proper inspections and work on the thing, and then negotiate with the seller to be able to figure out what repairs to do. And bit by bit, it kind of ratcheted up and up and up in this whole thing that became a consignment offering. Hey, we'll give you a guaranteed price. And for that guaranteed price, we'll then take the car, we'll sell it. If it sells for more, we'll share the upside. If it sells for less, you get the guaranteed price. And that product offering scaled to a certain extent. That was actually really popular in the Bay Area. But then as we started opening up other locations like Los Angeles, Seattle, San Diego, et cetera, other places up and down the West Coast initially, the user research, the team went out and did a bunch of really insightful user research and discovered that there's a lot of people who want to consign their car, but that's only like 20% of the market. The other 80% kind of need the money from that thing to buy the next thing. And so we thought we had this product market fit and we were growing and had this thing, but then we started kind of hitting a wall. And ultimately a marketplace can be supply or demand constrained. In this case, it's a supply constraint of like, well, you can't sell and transact more cars if you don't have more cars. It's kind of a basic law of physics. And so what we began realizing is we needed to start rethinking the product. And the team came to the conclusion, like, actually, what we need to do is go out and get a major financing line and start buying the cars and paying people up front for these cars, what we call advance funds, advancing people the money on their car so that they could afford to go buy a new car. And that would be like a market opening. And bit by bit, we discovered that, as you go down that path, we actually ended up in a very different business than we originally were in, because we were in this consignment business where we weren't taking asset risk. And then suddenly we were like, wait a minute, in order to meet the user need, we have to do something very differently. And that is we have to finance and take asset risk on hundreds of millions of dollars worth of vehicles. We have to store those, repair them, maintain them, and manage them. That's like a whole asset management program that, like, in the initial phase, we hadn't been in at all. But that's what was needed to grow because we tapped out the market for the thing that we were doing. And that was, I think, a really instructive startup example. And the reason was, as a startup, like with, you're a small startup with like 20, 50 people, nobody's going to give you a, $100 million line to go buy and sell cars, for example. Nobody's going to do that. Like, it's just really hard to get that debt financing and get somebody to take that kind of risk on you. Banks won't do that. And so having bootstrapped and learned our way forward with a consignment model, but then having built the algorithms, the learning to be able to know what's going to sell, what's not going to sell, what's going to clear in a marketplace and what's not, was not the answer, but the beginnings of being able to build an asset management model, essentially a vehicle clearing price algorithm, and start doing the data science around what's it going to take to identify whether or not a thing is going to be good or not. And that data was really critical, but you couldn't get the data without doing the first thing. So in a weird way, we had to be in one business at the outset, grow, realize that had limitations, but we couldn't have been in the second business if we hadn't been in the first business in the first place. And so that's what I mean when I say sometimes the thing that you do to grow at the next stage is not literally the same as what you do at the next stage. But the virtue of the second thing was, even though there was more risk, there was also less operational complexity. So there was simplification. And we had this moment of being tempted to try and do both simultaneously. Hey, hey, can we cover 100% of the market, the 20% that want consignment and the 80% that don't? And this is where we had to have real rigor as a team. And particularly the engineering team looked at that and said, hey, we can do both, but there's just a ton of complexity at maintaining and trying to not just maintain, but develop and continue investing in two separate product lines simultaneously. And so we had to make the very difficult call, Adam, which was, we're actually going to shut down what was our core business in favor of launching essentially a new business, because that second new business was larger. And again, it was a business we couldn't have gotten into if we hadn't done the first thing, because we just didn't have the track record or access to capital that we would have needed. But the combination of being able to be willing to do something new and different, and even bet the whole company on it, sometimes is what's required, because you can't take on so much complexity of doing the old thing and continuing the old thing. You got to let that thing go and do the new thing.
That is, you had to burn the ships.
Exactly. That's the explorer in the new world, so to speak, analogy of like, we will burn the ships and we're going to go figure this thing out because we can't go back.
We can't go back. And that is an amazing story. And I feel like there's got to be there's a lot of founders right now who are in that fork in the road kind of thing. And they're making the easy decision of let's just do both because it's safer. Like it's what's got us here. Like you're looking at the revenue that you have in the company so far. You're looking at the things that you put in your pitch deck to raise the rounds. And all of those things are based on the previous model. And yet you had the confidence to go through. That is an amazing story.
And there's I would say the how you do that is important. It's not just a matter of like, okay, we're doing the new thing and we're done. There is inevitably a time frame when you will have to do both. And ideally you do it in a way that allows you to pressure test and make sure that the new thing can work before you bet 100% on it. Like you kind of want to discover that, like, before you burn the boats, you're not on a tiny island. like make sure that you actually have landed in a place that has enough exploring to do. So there is some legitimacy to the you're going to have to do both for a while, but in order to scale, and this comes back to growth, very much came to the conclusion that it was going to be very difficult for the team to scale trying to do too much all at once. Like simplicity becomes an incredibly important thing in scaling. And so in a way, you mitigate risk by doing your old thing while you're doing the new thing, but you're also gating your ability to grow, because trying to carry that old business while doing the new thing is hard. Now, and granted, like, not everybody does this elegantly. We all remember the Quickster days of like Netflix, where like, we're not going to do DVDs anymore. And then like, it's just like a disaster. So sometimes you have to do that elegantly. It's not just a simple burn the boats kind of thing. Like there's an art to how you go about letting go of the old and focusing on the new for simplicity.
That is good. Simplicity is essential to scaling, but yet the transition matters. And it's not just a rip out immediately. It's be intentional about phasing that down to keep the customer trust and keep up the brand trust and handle it the right way, but also be intentional about proving that you're on the right island and that that you are on North America and not a small Caribbean island.
That's the deal. And that is the hardest moment, actually, is making that decision to make the change and then to sunset or shut down the old thing, and then saying, hey, how much information, how much signal is enough to be able to make that call. That believe it or not, that pivot moment is I think that's why I give the example, is one of the hardest and most challenging for a team and the leaders to go to.
I have no doubt. Well, just the last question, real quick, is what is your superpower? And I think it's kind of dovetails, because I could guess a couple, but what is your superpower as a founder?
I'd like to think, this is a question of self-awareness, actually, really. I'd like to think my superpower is being able to envision a new world in a new way, see a thing that's just not what it could be, and imagine and see what it could be, and imagine a world that isn't, but that could be, but then be able to bring a team along with me on that one. I'd love to believe that being able to articulate that for the team so that people can see it, and therefore people who are a lot smarter and more capable than I am can make that thing happen. Because I believe part of being a company, and this is what's really critical, particularly at the early phase, is realizing that as a leader and setting the vision, it's really critical to create that context, but that there's a temptation to try and do it all yourself. And that's necessary at the very beginning. Like when you're first founding, like you're it, it's very small and you just got to do it. And this comes to the thing that got you there might not get you to the next level, is being able to surround yourself and build out the company with a group of people who are just way better than you at doing a whole lot of other things, and most things, in fact, ideally everything. And so that was something that if I had an Achilles heel, my superpower is envisioning that future. My Achilles heel is either failing to articulate that for the team, or not getting the people who are way better at it than I am set up with the context and the runway fast enough to be able to go and make the thing real. That I think that was a key learning for me as well, and that's something that I think a lot of founders do struggle with, because you have to carry, and you work in the business for so long. Being able to realize that you become the bottleneck and you've got to be able to step back and scale your team is a really critical thing. And that definitely happens by Series B, if not right away in the A.
Man, Toby, this has been amazing. Thank you so much.
Well, Adam, I appreciate you having me on. It was fun to get a chance to chat and reflect with you.
That's a wrap. Thanks for listening. Make sure to subscribe on Apple, Spotify, and Google. If you want to learn more about Zendesk for Startups and our free offer, please check out our website at zendesk.com/startups.